Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive sellers were active at the 09 to 11 resistance area. And at this point, heading into the open, the sell side is a little bit more dominant. But overall, the market is stuck in a balance and has been range bound for the last 3 to 4 sessions. And we're going to continue using the 94.75 to 97.75 area as the bull bear zone. As long as ES is holding that area, it means that this recent 3-day balance is still intact, and the buy side still has potential to step in. But if that area fails and we start breaking down below 94.75 to 97.75, that would mark a short-term balance breakdown, which can bring the 86.50 to 88.5 area into play, and even 78 to 80, which is the larger time frame support below 94.75 to 97.75. On the upside, we have pre-market resistance at 05 to 07, followed by the initial resistance zone at 09.75 to 11.75, and the absolute balance area high at 2015. The main catalyst today is the FOMC announcement at 1 p.m. Central Time, followed by the press conference at 1:30, and that can really serve as a catalyst for a directional move outside of this recent range. And heading into FOMC, the market can continue balancing. So we have to be careful at the 94.75 to 97.75 area as far as the short side goes, because that could still be a spot where buyers defend and we continue to just chop and balance within a range. But understand that FOMC can serve as a catalyst for a directional move. And if off the FOMC announcement we're breaking down below the bull bear zone, and we're seeing broad market weakness and sustained downside momentum, then we can get an extended move into at least 86.5 to 88.5 and quite possibly 78 to 80. On the upside, a breakout above 05 to 07 would be the first sign of buyers really regaining short-term strength, and then a breakout above 09.75 to 11.75 and 2015 would mark a upside balance breakout attempt. And as long as that's happening with some decent upside momentum on the tick and some broad market strength, then we can extend the range to the upside as well. And in the event of that upside breakout, we'll have to be careful at 16 quarter to 1775 because it's right above that 2015 absolute high. And the only time it would make sense to fade that zone is if the market went in a straight line from the bull bear zone all the way up into the 16 quarter to 1775. But if the market is balancing for several hours and then attempts a breakout, then you want to be careful at that resistance zone because it really may not hold and the market may end up going up to 21 to 23 half. We have an open gap at 26 quarter, and then the bigger resistance is at 32.75 to 35 quarter, and that would also be a range extreme on the day time frame. So the main idea today is the market is stuck in a balance, it's stuck in a range. There are several economic reports due today, which can serve as a catalyst for a move outside of this balance, and we have to be open to the market tipping in either direction, but holding above 94.75 to 97.75 still leaves the balance area intact, which still leaves the door open for the buyers to step in. But if that zone doesn't hold, then we can get short-term long liquidation, and then we can go down into 86.50, 88.5, 78 to 80, and 78 to 80 is really the area where responsive buyers are more likely to be active again on first test. So those are our main thoughts heading into the open. Since we are in this range bound environment, the main idea is really going to be trading the edges, and we're going to be cautious and a bit more careful trading the middle of the range. So those are our main thoughts. Let's see how this balance area resolves, and we'll take it from there.